Bitcoin, crypto, and the stock market are all dropping big time today. So let's jump right in, take a look at what's going on, and see if we can determine where the markets are going to land and what we can expect. This is Bitcoin on the hourly. The sell-off started earlier this morning, about 3 a.m. Eastern Standard Time, on the back of the reports that Russia and Ukraine are going to have conflict, and that Russia is definitely invading Ukraine, and that there's been mortar fire, things like that. So that's just all over the news right now, that that the Ukraine-Russia crisis is imminent, that Russia is definitely going to invade. So that's not me, that's just all over the news everywhere. That's just what all eyes of the investment world are looking at right now, is the Russian-Ukrainian crisis. It's pretty much all the news outlets are reporting that. So obviously investors and markets are going to be watching out for that. We'll get into some specific Bitcoin and crypto news here in a minute. But the real question is, where will the selling end, and why are the markets selling? Stock markets right now are down about 1.5% across the board between the Dow, S&P, NASDAQ. There are some specific stocks that are doing okay. Earnings came out. We had some earnings reports today. Walmart, we had consumer price index the other day that sales and spending were up. Walmart's doing well. Reports are coming out in terms of earnings that are looking pretty strong. But a couple of things to think about. We have options expiring tomorrow. Markets are closed on Monday, and with potential conflict on the horizon, markets are going to sell off a little bit. Investors are going to move into cash a little bit to kind of ride the weekend out and see what happens with potential conflict. And why would global investors be worried about a conflict between Russia and the Ukraine? How can that affect the global economy? That's going to drive energy costs, which will create opportunities for investments in that space. So investors might take profits and reduce their exposure to equities to move into commodities and energy markets. If something like that happens, there could be opportunities there. So a little bit of hedging there, a little bit of opportunistic play. And at the same token, we're not sure what the escalation would look like, what the potential of the conflict could look like if it gets out of hand. So that's something that weighs heavily on investors. It's early, markets just open. The selling pressure is continuing. So generally what you're going to see in the markets with something like this is it'll bounce back around noon, then maybe drop a little bit. And then again, like I always say, you want to watch the price action into the close of the markets for the stock markets. That will tell you a lot about investor sentiment, whether we come back in the afternoon toward the market close, or if the selling continues. So right now it's just going to be up and down until we get close, unless something big comes out. So you definitely want to be on the defense. You definitely want to watch global geopolitical events around the world right now, because the markets are reacting to that, and they're going to continue to react to that because these assets are risk assets. Equity markets are risk assets. Bitcoin, cryptocurrency are risk assets. So they're going to respond to world events. They're going to respond to Fed economic policy. The minutes came out yesterday from the January meeting. And remember, that was the January meeting. So right now, the Fed basically said, we're going to take some kind of action, but they didn't say what kind of action. So until we see action from the Fed, it's all talk right now. And talk can move markets, but the real movement is going to come when the action comes out. Like we talked about, depending on the action, the results will be exponential to the upside or downside. If the Fed's aggressive, then we're going to see, a lot of that's priced in, but if they come out really aggressive, you'll see a little bit more of a sell-off before you get a bounce. If the Fed comes out light-handed and dovish, then you'll see markets react and rebound immediately, which is kind of what I'm thinking. I think the Fed's going to come out soft, maybe a 1/4 point raise, maybe some talk about reducing balance sheet at the end of the year or something like that, or second quarter, third quarter, whatever. I just don't see them coming out really hawkish and really strong. That's just not the nature of Powell. He's very worried about the economy. Inflation is a big problem. It's getting way out of hand, and it's really affecting things, but the economy is still looking pretty strong. Labor market is still looking pretty strong. So it'll be interesting to see what they do. And until they get there, we don't know. And again, it's not what they say, it's what they do. So what am I looking at right now for Bitcoin? We talked about this yesterday. about Bitcoin coming down to potentially retest this $40,000 level to see if we're going to continue into the retracement that we've been talking about to that 0.5 to the 618 level from the previous range low of closing low of 35,000, which brings it up into that $50,000 to $55,000 range back in this area here, where Bitcoin came from back in December. Before we see if this is going to be a longer sustained uptrend or if it's going to roll over into a longer term consolidation of a bear market. So that's what we're looking at. So your level right now is basically 40,000. If Bitcoin breaks 40,000, then it will continue down and retest this $38,000 level. And then obviously, all the support levels from there. And what is support? This is all buying pressure. That's support. What is resistance? That's selling pressure. So right now, there's just so much uncertainty out there. Investors are just divesting themselves of risk, looking for downside and better potential entries. If we look on the daily, last night, this close that we were looking at, trying to determine if we're going to have a higher high or a lower high, basically even with the previous. So we still have a lower high in place, and now Bitcoin could potentially put in another higher low right here. So right now you have your low at 35, you have a higher low at 37, 36.9, 37-ish. So if Bitcoin closes lower down in that $40,000 range, then you have another higher low. So that's good, higher low, higher low. So what you want to put in, again, is higher highs in this trend to reverse the uptrend. And Bitcoin is basically putting in another trend line here. We watch these trend lines because the trend is your friend, and you want to always trade with the trend within the range of the overall cycle and the momentum of the cash flowing in and out of the markets. So right now, Bitcoin wants to come down. This is the daily trend, and test this little trend line that we're in right here after it broke out from this trend line here, which was the major trend that Bitcoin was in, broke through. Now it's coming back of a retest of this rising trend here. And if we look at it on the hourly, you can kind of see what's going on here with everything. So we'll see if Bitcoin bounces off of this trend line here. That will be a good sign for continuation. If it breaks it, it's going to come down. So that's kind of the levels that what you're looking for. And ultimately, like I said, if it breaks through this, it could come down and retest this trend line. That would be a worst case scenario. It would be really unusual and unlikely for Bitcoin to test back below that $35,000 level. If anything, it might put in another bottom in that range and then move on to a retracement. Now, that is all things being kind of equal and normal. But right now, with the potential conflict, all bets are off, and you just don't know. You have to really watch what's going on with Russia and Ukraine. It is going to affect markets. If they do invade, you'll see markets sell off again, definitely drop back down to these $36,000, $37,000 levels on Bitcoin. No doubt that it would retrace this whole move if all of a sudden the news came out that Russia is invading and we have conflict on our hands. So that is not fully priced in. The Fed, however, the Fed minutes and the Fed potential of raising rates is currently priced in, but the effects of that are not priced in. And we'll talk about that at the end here and kind of work our way through some of the news here that's going on. So latest Bitcoin, obviously the news for the industry continues to be strong, continues to be good. Every day you turn around, Russia is really trying to embrace crypto. They're trying to turn things around and turn the corner. So every day, the news of adoption and the reports of adoption in the crypto world are getting better and better. But again, the Fed is a big caveat there. And then, of course, we have our great Charlie Munger, who came out the other day with his comments about crypto. And obviously, Charlie is one of the most brilliant, successful investors of all time, Charlie Munger and Warren Buffett, Berkshire Hathaway. But they have missed the boat on technology, and they will readily admit that a lot of those things are just outside of their purview, that they are not experts in those spaces, in those industries. So it's really interesting that that Charlie would come out this way without further investigation into the space. And he's basically looking at the industry as something that attracts charlatans, and that it's all just really has no intrinsic value, that cryptocurrencies are things that just do not do anything. Their whole business philosophy has been buying companies that produce good products that the consumers demand, that aren't going to go away, that have a moat around them like a Coca-Cola, things like that. So it's really interesting. But now they are investing. They've gotten rid of some of their traditional banking investments, and they're moving into banks that are banks for crypto investors, and that have more digital assets on the horizon. And of course, we've seen that JP Morgan is getting into the business as well, more, with JP Morgan and Jamie Dimon in the metaverse, and JP Morgan wanting regulation so that they can bring more investors into the space. BlackRock setting up operations so that their clients can invest in cryptos. So as more and more institutional investors come into the space, as more and more corporations come into the space, and bring more capital in the space. And again, what I say is, you want to watch the capital, you want to watch the talent. That's going to tell you where the opportunities in the space are. And for organizations like Berkshire Hathaway with Munger and Buffett, eventually they're going to be out. They're going to be gone eventually. We all exit, as I always say. So there is a younger generation at the firm that's going to take over, and most likely they're going to make some investments in the space at some point once that current leadership turns over the reins. So I see a lot of that as short-lived, and I see a lot of what their philosophies are basically is what's worked for them their whole career. And you can't blame them for that. That's done well for them. It's worked for them. They don't really have to do anything. They don't need to take any risk. And the crypto space is a risk asset space. Things can go up and down exponentially very quickly, but there are long-term plays in the space that a lot of the firms around the world are embracing because their customers want it. So they're going to have to. And that's where the trends are going, that are going to lead more and more investors in the space, more and more adoption into the space, and ultimately will create more value for the assets in the space long term. So those are the things that I'm looking at today. And the big thing is, until we know what's going on with Russia and Ukraine and the outcome of that potential conflict, it's kind of all bets are off. Everybody's kind of hedging their bets, hedging their risk, going into cash to protect and to take advantage of opportunities of a potential conflict in other areas of the market, like commodities, things like that, energy, those types of things, which obviously costs will rise in the short term. And like I was talking about earlier in terms of pricing in, so the Fed movement action from the Fed is priced in, as long as it's nominal action, which is what everybody's kind of expecting. If they come out with a quarter point, no big deal. They come out with a half a point, that's going to be a big deal. You'll see markets pair off again a little bit more, at least short term, and then they'll bounce back like they always do. But there will be a reaction. It's part of the algorithms. But what they do not have priced in is the long-term effects of inflation and the policy mistake of the Fed. So the markets have not priced in a serious policy mistake by the Fed, and the ultimate results of that longer term in terms of the outcome and the economic environment that could create, that inflation creates, because inflation's at a point now where it's changing people's behaviors in a lot of ways, which are going to reflect on the earnings of companies, which will reflect in their valuations and their stock prices, especially without the Fed continuing to pump liquidity in the market. Valuations are going to have to reset. They're going to have to come back down to more reasonable levels based on actual earnings. So if inflation's affecting spending and interest rates are higher, that affects the ability to borrow. Credit markets tighten, which limits the amount of capital going into the economy, which limits growth, expansion, earnings, et cetera. So those are the things that you have to look at, that you have to understand, and that will create opportunities eventually, because it all works in cycles. It's ebbs and flows. Good times never last. Bad times never last. Markets rebound, range, correct, and bounce. So you just need to be ahead of the curve and understand what's going on from a global economic environment, a geopolitical environment, because when you're dealing with risk assets, They're all interconnected. They're all interrelated. And it's the same investors when you think about adoption of corporations, institutional investors, banks. That's the stuff they follow. So that's why price action moves with the news, because that's what investors are looking at. They have algorithms, they have mandates, so they have to act according to global economic environment as well as geopolitical environment. So those are the things that I'm looking at. I hope this video helps you, and I will see you on the next video. Have a fantastic day.